Hello guys, I hope you well and welcome to today's live coverage of the US non-farm payrolls. Going to take a look at the main currency pairs and see how they react following the US NFPs. I'm also here with a Bloomberg platform and should hopefully be able to communicate to you guys just a few seconds after we get the data to let you know guys how the outcome is, so what the outcome is, and then obviously talk through the reaction in the market. Now, before we start, though, as always, I need to spend a second or two on the risk disclaimer. So let's do that so everybody can read it through, and then we're going to go ahead with today's presentation. Okay, so let's begin here. So guys, thank you so much for joining us here at the live trading room. My name is Alejandro Zambrano. Here's a picture of me, and some of you guys know me from Daily FX, where I used to work from 2009 until 2016. And some of you guys also maybe know me from Londinium FX. But I'm now with Amana Capital, and we are going to provide you guys with an overview of the US non-farm payrolls. Now, if you want to join here and ask questions like Lawrence or MI, then you just need to be logged into a YouTube account. It's a free thing. You just need to log in and register once, and you have the ability to ask questions here, and of course in any other YouTube uh, uh, event. As well, we're live on Periscope, so you can ask questions via Periscope, and as well we are live on Twitter, so you're most welcome to ask questions via Twitter as well. Now let's begin. So we're gonna be using some charts, and we're gonna provide you guys with some quick technical analysis to give you an idea of what to look for. But before we do that, what are the non-farm payrolls? Non-farm payrolls, simply put, is a number that shows the total amount of jobs created in the US. And then within the same report, we have the unemployment rate and we have wage growth. Now, the non-farm payrolls will sometimes differ to the unemployment rate because they're estimated in two different ways. To give you an idea, with non-farm payrolls, they call companies and ask them, did you hire or fire this month? What are the numbers? When it comes down to the unemployment rate, they give people phone calls and ask them, are you employed? Yes or no, full-time, part-time, so on and so on. So that's why sometimes they're gonna differ. Now, if you think about it, the expected outcome for this month, according to this Bloomberg estimate, is that the US economy added 313,000 new jobs. And the reason why it's so high is because last month we had a negative outcome of minus 33,000. And the reason why we have these big swings here is because of the big hurricanes we had in the US, and that's going to distort the headline number more than usual. But here's question forward. Say, for example, that the number is 200. Well, that's 113 less than what the economists anticipated, and that would tell us that the US economy is doing less good than anticipated. The dollar tends to weaken at that point. However, though, what if the number is 400? Well, if the US economy added more jobs than the economists anticipated, then obviously that will give us an idea that the economy is doing better than expected. Now these numbers, this one in particular, what they do is that they ask all of the big banks and a lot of other, say pension funds analysts, and they ask them, what do you think the non-farm payrolls is going to be? And then one guy is going to say 400, one guy is going to say 300, one guy is going to say 200, and then they're going to ask, and usually have a big sample of maybe 80 up to 100 people, and then they take the median estimate out of all of these economists and analysts that predict forecasts for the non-farm payrolls. And that's how to get these numbers. So it's a way of gauging what the market thinks that the numbers are going to be. Now, this is not the only number we should focus on. So we do have the headline number, and because of this, there's gonna probably be a revision here. And obviously, if the number is not 33,000, is zero, then to the prior month, then we need to take that into account when we're looking at the headline number. So, for example, if this is 280, but at the same time this is reduced by 33, then the actual outcome over the last 2 months is actually not going to be that bad. Now, the other thing that people are going to focus on is the unemployment rate. Now, the unemployment rate by itself is probably going to remain around 4.2%. As long as the known from payrolls gains with about 150, 160, then it's quite likely that the unemployment rate is going to remain low. Now, this is really where the focus is at, the unemployment rate and wage growth, because when the unemployment rate is low, so if you think about it, you have 100 people in the room and only 4 of these people are unemployed. Now, these 4 people, they are not always unemployed. Maybe 2 of them are just between 2 jobs, whereas the 2 other one are students, so people that are not even participating directly in the labor market anyway. Now, because everybody in the room of these 100 people have a job except these 4, then if you want to hire somebody as a corporation, usually you need to go to your competitor or need to find someone new to and train them up. So there's some sort of competition, especially if you're hiring someone from your competitor, where you would need to pay them a little bit more than you're doing right now. And so the low unemployment rate by itself tends to create higher wage growth. And that is where the focus from the Fed is. So if the average hourly earnings increase with 0.2 or ideally 0.3, 0.4, 0.5, last time it was 0.5, then most likely the wage growth on year is going to be higher than 2.7, and most likely the dollar is going to see a gain. So here's really what we want to focus on. And we're going to focus on this and on the headline number to provide you guys with an idea. Now, there's other numbers here today as well. You got the Canadian unemployment. The Canadian NFP anticipated to see a growth of 15,000 new jobs, whereas the Canadian unemployment rate is anticipated to be at 6.2. So let's put those numbers into perspective from a trading perspective. So if we see better numbers from the US, so the headline numbers are stronger than expected, and the wage growth is strong, then I would guess that the euro dollar could break below 116.05. And because if you look at it from a bigger picture, the downtrend is bearish, then most likely take out this low, and this market could first touch the low, which is 1570, and then down to pretty much 49.93. So that would be on the data being better than expected. Now, the alternative is that the data is worse off than expected, and we take out 116.90, and then I think this market can go up maybe to 117.60 or so, up to the highs, and then we'll see, because the big picture trend for the euro dollar is still bearish, and the reason for that is because the ECB decided to prolong quantitative tightening or quantitative easing, and on the other hand, the Fed are quite optimistic about raising interest rates. Now, again, if the non-farm payrolls are healthy and good, most likely the Fed will increase interest rates in December, so the big picture trend will most likely remain intact. However, though, if the numbers are terrible, especially wage growth, then this market is going to push all the way up to the upside. But as long as you cap by this high, I still suspect traders, say Thursday, Friday next week, are still going to look to sell. Now here is the dollar CAD, and the dollar CAD is bullish above 127.74. Take out the low, and we're probably going to be down here. So to trade this, we need to watch the Canadian numbers and the US numbers. There are other markets, of course, as well, and we have the dollar yen. Let's see if I can get this to work. So here's your dollar yen, and the dollar yen here should be really, really straightforward. On good outcomes, on good numbers, the dollar yen is probably going to head higher. Why? Because higher interest rates in the US tends to lead to a higher, stronger dollar, and the dollar yen should, in this case, take out 114.45 and potentially trade up to 115.38 by the end of the say Monday, Tuesday next week in worst case. On the other hand, if the numbers from the US are really soft, then this market is probably going to go down to maybe 113.16, and then we'll see if it wants. For betting on bad non-farm payrolls would be the dollar CAD, because it is short-term overbought. You can see it rallied quite strongly from 24.46 all the way up to 29.43 and 29.12. And now it's just trading sideways. So if the Canadian numbers are just neutral and the US data is bad, I think 40 seconds from now. Ten seconds from now. So the number is 261. 261,000. So that's worse off than expected. And then you have average hourly earnings, which were worse off. So zero growth in average earnings. So the overall report from the US is bad. The actual and head down lower. But first, quickly, let's just focus. Look at this. Canadian unemployment growth of 35K versus 15K anticipated. So here we have a match made in heaven, which is the Canadian data is better than expected, and then you have the US data that is worse off. So here, most likely, traders watching this right now are probably going short as we speak, looking for this to head down to 26.50. But because of the bad number, maybe we'll head down lower, maybe to 25.70. Now, I suspect the same traders that are shorting here at these highs are most likely putting stop losses on the other side here, which is 29.19. So interesting set of data. So the data overall was bad, as you could clearly see from that little snippet. Let's just take a look at the Canadian employment numbers. So the employment numbers was 6.3. So the Canadian data here, this number is good. This one is a little bit worse off. So there's a bit of a mix, but still good Canadian data. In the case of the US, it's just bad numbers. Now you can see here how this can compensate. So this was minus 33 before, and now is plus 18. So 33 plus 18. That will be an addition of 48. So 48 new jobs, right? Now if we look at the estimate for this time around, it was the anticipated number was 313 minus the actual outcome was 261. So that was a loss of 52. All right. So on the headline was a deviation of minus 52, but because of the revision, we added back 48. So if you look at it from last month's number and this month's number, look at from that perspective, we have actually to some extent some sort of a neutral headline number for the non-farm payrolls. On the other hand, though, you have this, which is wage growth, which is actually not good at all. It's zero growth, and the actual year-on-year reading is now at 2.9, and as well, the prior month's reading was revised lower from 2.9 to 2.8. So this here, it wouldn't surprise me at all if the dollar CAD continues to go down lower, and in essence just gives back more of its gains that we've seen here lately, down to 26.35, maybe a little bit lower to 25.70. The dollar yen here, because it's such a strong trend, the market is really struggling to do too much here. Let's take a look and see what the dollar is doing. A euro dollar, that is. So the euro dollar is moving to the upside here, which is fair. Because of the numbers. So this could go up a little bit, as I said, maybe 17.40, 17.60, but my preference really, and again, match made in heaven today, is the dollar CAD. From a fundamental point of view, there's really no reason why people would not, what anybody would actually be buying here at 27.74. We can take a look at the pound versus the USD as well. That one had a very volatile afternoon yesterday, and Surely now it's moving back up, most likely correct up to 50% or so of yesterday's decline following that rate meeting by the Bank of England. And then we'll see exactly. I don't know if you've been watching my setups on Trade Captain, but break to 130.31 can take you down lower, and a break to 133.37 can take you up higher. Okay, guys, we're going to open up the floor now, see if we can answer some of your questions. So in the chat box, just write to me here if you have any questions. And as well, I'm going to check Twitter and Periscope if there's any questions or any markets that you would like me to watch. See if I can open those Periscope questions. I'm new to Periscope, so okay, so no questions in Periscope. And do we have any questions on YouTube? No, we don't. That's fine. So let's just watch the markets a little bit more. So if you guys just joined, what did we do today? We provide you guys with an overview of what the NFP is all about, what the numbers are, which one are important, and the way we should look at the data to make a trading decision. And we also looked at the technical levels, and we said a break to 27.74 should open up for decline to the downside. And we said we would need to watch the Canadian data as well. Okay, and because of that, we have a break to the downside, which is a nice little trade here because you're combining the strength of the Canadian data and the weakness of the US data. So we got a question here from Mr. Lawrence Green. With the bad US data print, do you see indices moving up? Is this due to cheaper dollar? Let's actually take a look at the indices, and let's load the let's actually load the let's load it here. So this is the S&P 500. So it's moving up, and you say it could be because of the cheaper dollar. I think so. I think it's not really due to that. I think it's due to the following. I think the fact that wage growth is not as high as the market anticipated, that could lead to the Fed saying, let's hold off with a rate hike in December. Let's wait a little bit longer, and maybe we'll increase interest rates in early next year. Not that I still think they're going to push for a rate hike, but I think that's really the twist. Why? Because there is a really nice correlation between interest rates, economic activity and stock markets. So as long as the economy is growing and it's not growing too fast that the Fed needs to increase interest rates and put the brakes on, stock markets are gonna increase healthy. But if they start to increase interest rates, the Fed, then suddenly it's more expensive for people with mortgages. Suddenly it's much more expensive for corporations to borrow money, and from that perspective, there's a nice link here really when the increase in interest rates too much that the US economy tends to peak, and when that peak happens, stock markets as well tend to peak. So I think that is really the case, that the data is okay because the unemployment rate is still low, the NFP are still okay, but that lower wage growth is causing people to say maybe the Fed is not going to be in a hurry to increase interest rates, and I think that's really what's supporting the dollar, the S&P right now. Okay, guys, so let's take a look let's give you guys a little recap here. So the dollar CAD, I think that's really the better one. It's a nice combo. Could easily spike up, but I think as long as you trade below 19, 29, 19, I think this can go down to maybe 26.60, 26.35, and then we'll see if we want to continue to head down lower in the next few days. Guys, if you are on YouTube, and even if you're not on YouTube, don't forget to subscribe to our channel. Um, if you just click here, and you should have a little function here, a little button. Everything loads a little bit slower, of course, because I'm actually using this computer to broadcast. But there's a little button here. Most welcome to just subscribe. We do publish a few videos every day, not every week. We have the Forex market outlook. We have the cryptocurrency outlook as well. Those we do them at least twice a week. And we also do other videos, like we did actually share a preview to the NFPs today as well. So check that out. On the home page as well, you have all the different news here. We have a team that writes article for us. You have the fourth quarter outlook, and you have more webinars, usually educational. Check out this one, Introduction to Bitcoin and Trading and Blockchain. We have a lot of people that sign up for this one. There's a huge interest in this as well. If you are, in the mood of a seminar, a lot of these are in Arabic, but this one here is in Malaysia. I just hosted 2 seminars, one in Beirut and one in Dubai last week. For more seminars, just keep an eye here. I'll be in China in December. More videos down here at the bottom. So explore the homepage. We have a bunch of cool tools as well. Sentiment, correlation, Fed rate hike probability, Forex volatility, Forex performance. If you're interested in technical analysis, usually I post things here under short-term analysis, but as well under video reports. You have yourself the same charts I've been using now. You have our economic calendar, which is faster than most other people's calendars. And then we have signals, and then we have what we call the premium section of tradecaptain.com. The reason to join the premium section is that you'll have access to premium education and the ability to join client-only webinars, trade signals as well, and much other good stuff that we only offer to people that are on demos or people that are on real accounts. Okay guys, I want to thank you so much for joining me. MI Lawrence Green. Don't forget to follow us on Twitter, and everybody else watching, don't forget to retweet if you like this. Why? Because it's very straightforward. The more retweets, the more views, the more likely is it that we're going to continue to promote and do these events. If it's the other way around, very few views, then we'll take them off and try something different. Okay guys, have a brilliant day, have a good weekend, and thank you so much for joining me. Cheers.